Hi, so this is Christian, and I'm doing this video to simplify tax because I believe tax is amazing. This is regarding expensing out repairs and maintenance. So I have this client, a US based, who used to account this transaction, particularly from this kind of vendor, as repair and maintenance expense. So what's the big deal? Well, at the first glance, nothing, but the fact that they purchased it as one-time big-time purchase, maybe to avail a discount for early purchase, then that is somewhat concerning to IRS, especially if they don't fall within the four safe harbor rules. So the first one here is the de minimis safe harbor rule, which states that you can only expense out transaction costing around 2,500 or less per invoice. Second is the routine maintenance safe harbor rule, which means that this expense directly out to the income statement if maintenance is being conducted more than once during the useful life. And the third one is the safe harbor for small taxpayer. So this technically applies to building, and the last one is the materials and supplies. So let's look into the details. So this particular invoice is for equipment repair. So the cost is amounting to 4,437 US dollars. So for the number one rule, it doesn't meet. Second, routine maintenance, probably they should provide the maintenance histories for IRS in case of audit. And then the third one, safe harbor for small taxpayer, it doesn't apply to this kind of transaction because particularly for building. And then the last one falls to materials and supply, then expense them out regardless of amount. So if a transaction doesn't fall within this four, then technically we need to capitalize it, especially if improves or restores a property or equipment and also adapts to a new use. Why do we need to do this? Well, to abide to the law and then avoid instances of being audited by the IRS. So first one, they will audit you because lessening your tax by claiming over deductions. Second, comparison analysis. So what's your expense last year versus your current expense this year? And if there's something unusual, then they will absolutely audit you because it triggers their system. Yeah. Nowadays, technology matters. And then third, you must hire tax representative. So it may cost you money. So even though we successfully contested that this is an expense item that should be treated directly outright in the income statement, then well, thankfully, but it doesn't end there. Once IRS audited you, they might audit other stuff. And this is a never-ending loop of tax audit.